All right, welcome back to Robinhood Stock Market Watch List. My name is Carlos, and today is Sunday 4th, and we're going to talk about this week. This is a live meeting that we kind of get together and talk about things that are scheduled to happen. That way we are aware of what's going to happen before it happens. That is a huge key and part of our success. That way we don't go into a week not knowing what's going to happen and being that person that kind of relies on the news, when it's better to, the pros have this old saying, buy on rumor, sell on news. So the idea is to be prepared, be in and ready for the news, because we got to expect it. And so one of the important things that we like to go over in our meetings is always starting from the top. What provides the market with the most volatility? And that's always going to be economic reports or other major world news. And so, economic reports are more predictable because they are scheduled, unlike other, international or other major news. Sometimes just happens out of the blue. We can't always predict that or control it. But with economic reports, that is something that we can that we do have a little bit of control over. And so one of our favorite websites that we like to use is a website and an application called investing.com.
The sun goes down and the moon comes out.
Somebody's messing around. Somebody is, I'm a huge fan of the Wednesday myself. That video got a lot of views. But anyways, let's focus on the task at hand here. With economic reports, we use a website called investing.com or an application, and there's just a little bit of configuration that we need to do, and that is all done through the filters area. And so if you're on the mobile application, it should look like a little funnel icon, but you'll want to click on it because we need to reconfigure this whole thing. Otherwise, it's just going to look like a bunch of gibberish. So once we're in filters, we need to clear everything. There's only two things that we need to have selected, and that is a check mark under the United States and a check mark under importance. You'll see a 1 star, 2 stars, and a 3 stars. We want to put a check mark under the 3 stars because what we're telling the system that we want to see everything that it's going to have the biggest impact on the United States stock market. So once you click apply, we'll scroll up. We'll need to click on this week. That way we can see what's scheduled to happen this week, though it's not as busy as what it was last week, but we do have something scheduled for Monday. Normally the majority of these economic reports are scheduled on a Tuesday, Wednesday, and a Thursday. Very rarely do we ever see anything on a Monday or a Friday. So it looks like they kind of have it spread out a little bit for some reason. Maybe they're trying to make it a week not as volatile. But let's kind of dig in and analyze this a little. So Monday,
we can't see your screen. We cannot see your screen, Carlos, since the Wednesday video.
Oh, okay. Thank you for letting me know.
Yeah.
That would be important. Let me go in there and.
I think that's why people are leaving and coming back.
Okay. Yeah. Any questions? Feel free to unmute, talk. This is a shared. Community where we can kind of, there's no limitations or restrictions. Everyone has the ability to voice talk, unlike other meetings and stuff where they like to restrict things. I don't believe in that. And so definitely, if you ever have anything to say, bring to the table. Screen sharing is available for everyone in case you want to show something or have any questions about something or want to learn something, because the more you learn, the more you're going to earn. And so just like these economic reports, if you don't know what these economic reports are or what they mean, be sure to click on it, because after a while when you dig into this regularly, you will start to memorize, because there's only so many economic reports. And so, but if you click on it, a new tab will appear, and it will have a little bit of a description on what it is and how it can affect the stock market on the bottom. Now, most reports usually need the numbers to be up. Higher the better, or higher means it's positive or bullish. But sometimes less is more, and so sometimes if things are too low or I mean too high, we need things to kind of come down. And so, but typically, what we want to focus on the most is the forecast and the previous, on the difference on those, but also knowing what time the economic report is scheduled to be released. Because we need to know, is it going to be released and affect the stock market during pre-market, or is it going to be released sometime after the market opens? So that way we're aware of what type of volatility to expect. Do we expect major volatility during pre-market or sometime after the market opens? That way we can implement certain strategies for our advantage. And so, and this, when we're looking at on the website, this is all going to be based on Eastern time. If you're looking at it on your mobile phone, on your mobile app, it's going to automatically configure it to your time zone. So it's very important, depending on how you're looking at it, that you know exactly when it's going to be released. So in this case, this report is scheduled to be released 30 minutes after the stock market opens. And so we might not see as much volatility, but with Monday morning, there's been there's been quite a bit of weekend news between Elon Musk and the Twitter files to Putin from Russia, doing more oil threats and stuff. So definitely, I would expect a lot of volatility Monday morning from this weekend news. But 30 minutes after the stock market opens, bam, more momentum for that volatility. So this is great news. Bad news can be great news. It just depends on how we utilize things. And so, but looking at the forecast and the previous, over many years I've noticed that Wall Street and the majority of investors seem to react to the forecast being, for example, let's say the forecast, comes back, so basically this is saying that it's expected, investors should be prepared that the number is going to be less than the previous, and which is bearish. So that's telling us be prepared for bearish characteristics. So the whole Putin news could be bearish. The whole Twitter files, that could be bearish. So we got a lot of bearish characteristics stuff. Unless for the Putin thing, that's going to help oil stocks. So I would definitely expect oil stocks to. I think it's already over $80 now. So we could easily hit $85 by the end of the week or midweek. But also, looking at these reports, knowing if they are a weekly report, a monthly report, a quarterly report, or a yearly report, the more rare that it is, the more volatile that it's going to provide the market. So unlike the crude oil inventory levels or the initial jobless claims, which is the unemployment report, these are weekly reports. So these have a mild impact on the stock market. They have a major impact on the stock market, but it's still going to provide mild volatility, but good volatility. But if it's a rare, like a monthly report, we don't see these very often, so I would definitely expect a good amount of volatility from this. So this should continue more momentum for Monday. So hopefully we have some pretty gnarly price movements with the stocks. And then Tuesday we have the energy report, the short-term energy outlook that's scheduled to be released around noon Eastern time. And so there's never any forecast or anything there. That's usually politicians talking, having meetings and stuff, and it just depends on what they say. They could say something that could scare investors. Usually they don't really say a whole lot that creates volatility, but but it's still something that that investors will be watching. Wednesday, we have the crude oil inventory levels that are scheduled to be reported 1 hour after the stock market opens. And so last week, it was tremendously down. Well, the report from last week, which was actually the Thanksgiving week, a lot of people did a lot of driving, and even the forecast wasn't expecting it to be that much. And so normally when we see a major swing with oil, it has a big bounce. And so this report was bullish. And so if it bounces back, that means that report will be bearish, because crude oil inventory levels, as most reports, we need those numbers up. Crude oil inventories and the unemployment needs to be down. And so, the less, the better normally. But if investors in Wall Street know that if the government's trying to crash the market or create a recession or whatnot, then they would be looking for these numbers to go up. So if they're trying to crash the economy, with the high interest rates and inflations and blah blah blah, then sometimes the reports are kind of react opposite. And so to be determined, but it's very important to focus on the forecast part of things, because that is going to hold the majority of the reaction that the market will have. And so that's just a rule that I have with my trading. And so, but it's definitely encouraged to do the same. And so, but with the forecast on Thursday for the unemployment report, that this is scheduled to be higher than the previous. And so again, that is bearish. So this week is just looking bearish all around. And so which we saw a little bit of a bullish characteristic just recently, only because Jerome Powell, and this is very common. He's been doing this for almost every quarter of this year, where they'll talk about interest rates and with the interest rate hiking and possibly cooling the next interest rate hike. And so it's been 0.75% for quite a while, and so they are anticipating that December, or here in a couple weeks, or actually, what is it, in 10 days, I think, that the interest rate hikes will be at a 0.5%. And so, but then all of a sudden, Jerome Powell or somebody says, no, but with looking at the reports lately, it doesn't look like that we should be cooling down anytime soon, so we're going to continue being aggressive. So we see this big surge a week ago, and now we're going to see most likely a plunge. And so but looking at this week, it looks pretty bearish. Even Friday, we have the forecast for the PPI report for the month of November, which is scheduled to be released 1 hour before the stock market opens. So we have the same amount as the previous that's forecast, and so that may be just kind of a wash, or they'll just kind of watch to see what it does, and that way they can determine how to play that out. But this is 1 hour before the stock market opens, so it should provide some kind of volatility in either direction, which is one of one of the strategies that we really encourage is to straddle stock options, because when you're straddling calls and puts, you're betting that the stock goes up and you're betting the stock goes down. Well, you can only lose what you have on one side, but your gains on the other side are potentially unlimited. And that's why, one of the reasons why we like to straddle most of the time, or at least the majority, because it doesn't matter if the stock market surges one day or plunges, as long as it picks a direction and goes that direction, even significantly, it's a win-win. So that way we don't always have to pick one direction when we can pick both. And so that's something we can kind of get into here a little bit more. But like I said, economic reports are extremely important. But the next really important thing is the president's schedule as well as the White House schedule. And so we've kind of utilized another website that provides this information, though the president and the White House schedule is scheduled on a daily basis, unlike economic reports or earnings or other things that are scheduled way in advance. The president, it doesn't work that way because things are always changing and he's got to adapt and whatnot. And so, however, this website provides the schedule at midnight every night at Eastern time or 9 p.m. at Pacific time. So those on the West Coast have a little bit more of an advantage because they're going to be awake to be able to look at this report, so that way they can kind of to continue to plan ahead. Because one of our rules is to always plan our trades and trade our plan. And so, and one of the things Benjamin Franklin used to say too is if you fail to plan, you're failing, or you're planning to fail. And so that is why it is very important that we always know what's going to happen before it happens. This is kind of like our radar. So it's like our far-sighted radar. So that way we're looking ahead. So, but yeah, not much on Saturday or Sunday. But looking at Friday, you can kind of see a lot of things, but there's two really important things to be aware of. And when you're looking at the schedule, you need to see if they're the president speech and the White House, and then you'll see something like this: the president delivers remarks. That's huge. And then this is Eastern time, so depending on your time zone, you have to do a little calculation. That way you're aware of what time it's going to begin. And so how you can tune in is you go to YouTube, type in Joe Biden live in the search field, or White House live 15 minutes before it's scheduled to happen. And a lot of times you'll see that some of these news companies and reporters are getting ready, but their camera's on. And so, but it hasn't started yet, but sometimes we can hear the reporters or the journalists of what they're saying. But it's really, really neat. And then all of a sudden it starts, and the conversations could have been going on for minutes, even 5 minutes. And then all of a sudden our news applications are going off saying, oh, this is broadcasting live now, blah blah blah. Well, I mean, everyone that's relying on these news applications for information, they're leaving money on the table because they've lost, they missed out on that 5 minutes, a very important part of the conversation. That's because the market is going to react to the live information, and so it's not going to wait on anyone. So that's why we always want to be aware of what's going on as it's happening as well. And a lot of times it may provide information on what they're going to talk about. And so signs of blah blah blah, providing resolution to avert the nationwide rail shutdown. And so with something like that, then we know he's going to prevent economic issues. And so this provided some bullish characteristics later on in the day. And so we can also, like I said, it's important to look to see if there's any White House press conferences, because these journalists, which they almost ask the same questions as you and I would ask the White House. And so but these are questions that can also have a big impact on the stock market, and sometimes they may provide an answer that we don't want to hear, or the market doesn't want to hear, and that could provide volatility. or maybe they do say something that they'll start talking about companies like Ford Motor Company building, these new factories. They're going to employ 4,000 new jobs, blah blah blah, and well, all of a sudden Ford stocks begins to surge. And so it's important to also be aware of what companies that they may be saying, because if they say a company name, then boom, we got to focus on that one before close. And so but yeah, this is just very, very important, very, very highly valuable information to utilize rather than just looking at charts and other things and relying on news, when we need to be aware of the news before it's released. And so yeah, economic reports, huge. The Joe Biden, or the president in the White House schedule, and then it's always a good reminder to talk about the quantitative tightening. And so as a reminder, this is the schedule. And if you're new here or new to quantitative tightening, sometimes we refer it as QT. There's quantitative tightening and there's quantitative easing. And so I started to learn about this in 2020 when the government closed the economy down for the second quarter of 2020. And it was very interesting. It was very manipulating, and we watched a lot of people use it for financial gains. And but when the stock market had kind of reached its bottom, all of a sudden the government implemented what was called quantitative easing, which means that the government started to pour billions and billions of dollars into the stock market, trying to keep the stock market afloat so it wasn't plunging as bad, and then maybe trying to help it recover. We had somebody in our group that specialized in this area and was able to provide us, and teach us some of this information. So I like to kind of continue, passing this information and knowledge over to you guys. But it was scheduled. When the government does this, they have to let the public know. But it's usually in kind of like a very hard to find area. And so the news media, they don't ever talk about it. Very rarely do you ever hear them mention it. But with the quantitative easing, there wasn't that many like the quantitative tightening. Even though there wasn't that many then, there was bigger amounts. It was huge amounts of billions of dollars that they were pouring into the market. But the good thing was that it was scheduled. It was consistent, where the market surged every morning that took place. So it was very predictable, where we could just buy a bunch of calls and we can double and triple our investments. I started to call that pump days. However, now we have the opposite. We have quantitative tightening, which is when the government begins to sell the stocks that they bought. And so we have the dates here, and then so the next one is going to be, and this year it's been twice a week. It's been usually on a Tuesday and a Thursday. So we have Tuesday the 6th and Thursday the 8th. So this says that Tuesday the government is planning on selling $3.7 billion worth of stocks. It's just trimming the fat off the market, the economy. And then Thursday we have $9.2 billion worth of stocks, just taking it off the market. And then this is very, very aggressive. I've never seen anything quite like this before. But as we get into next year, it will begin to slow down a bit as we get more into let's say February. Once we enter February, then we'll begin to see the quantitative tightening begin to cool down, where now they're only going to execute QT once a week rather than twice a week. As we get closer into spring, it'll become once every a couple weeks, and then summer it'll be like once a month. And so what investors are going to see, and then same thing with the interest rate hikes, they're going to be very, very minimal. But investors in Wall Street are going to begin to see the light at the end of the tunnel. That is going to greatly accelerate our new bull market that I estimate that will probably begin sometime around June, maybe. So June is right around here. June is the end of the spring season. It's a transitional season between our bear season and our bull season. So the transition can happen anytime between April, May, and June. But June usually, so at the end of every quarter we have what's called Triple Witching Day, which we need to talk about next soon. Triple Witching Day only happens 4 times a year, which is a day where a lot of things expire. Options, futures, all kinds of things. And so what that does, it forces investors to sell and to reposition, or maybe they won't reposition, they're just selling, but that creates a very bearish characteristic. And so once they kind of get that out of the way, then they'll begin to focus on pumping the market up. And so I would anticipate that the next 6 months after that is going to be where the market is going to recover a majority of its losses that it's had in the last year or so. And so, but it's going to be very, very interesting. But we have like 6 more months of bearish characteristics to deal with. Probably 4 to 6 more months of bearish characteristics that we got to deal with. So just be prepared. And this is all based on numbers. Numbers don't lie. And so. And then, as I mentioned, the Triple Witching Day. I'm going to see if I can Google it really quick. So 2022, we'll go NASDAQ calendar. It is very, very important. If you don't have a calendar for the stock market that you start. And so usually what I'll do is I'll use the NASDAQ calendar. I don't know if there's a 2023 yet. Usually I haven't been able to find one until usually the next calendar year. But we can see that here we're in December, and we can see that there's a lot of these symbols on December Friday the 16th. And so that is our Triple Witching Day for this December, and that's just in 2 weeks. So that is going to provide a lot of bearish characteristics, and sometimes with the economic reports or certain things that are scheduled, sometimes sometimes people like making a bearish day more bearish. And so but these calendars are very, very helpful as well. That way you can also see if there's any holidays, if the market's going to be closed that day, or if it's going to be kind of a half day. And so, but yeah, it's just really, really important. We will have another meeting next week, so I will remind you about Triple Witching. Will be later on that Friday, but really it's just right around the corner. And so, but like I said, it's just good to know. Let's dig into some options activity. So we always like to use bar chart website for our options activity because it's just so user friendly. It's just clear as day. And so on bar chart website, we have the options activity pulled up, the most active stock options. So Friday, Tesla had dominated the stock options by a lot, by 2.2 million in options volume, versus Amazon was second place with just about 1 million, as well as Apple. And as you can see, when we're looking at this information regularly, these three are always dominating this list because they are the most favorable stock options to day trade and to swing trade, or even to straddle. And so, but some people will maybe circulate between all three, or maybe they'll do all three you know, all the time, every day, or some may favor one over the other. I favor Amazon. Amazon is kind of the new guy out of the three. Apple's always been the number one. Tesla's been number two, but Amazon seems to fluctuate now between 1, 2, and 3. And so anything else is just kind of, you know, it just fluctuates. And so, you know, it's always different, but the top three, it's always these three guys. And so these are the ones. So the pros have an old saying that says follow the money, and so or always follow the money, and so that can mean a lot of things, as well as the activity here. We can see that the majority are always, you know, putting their money on these three guys for the majority. Anything else is just considered light, you know, but we always want to go heavy on these guys. But out of this activity, we can see that Tesla's activity, or calls activity, was almost 60%. So we have almost a 40-60% put and call ratio, whether it be for that day or going into the next trading day, which would be Monday. Same thing with Amazon. We have almost a 60% call ratio, 40% put ratio. So, but this is great information to utilize for maybe our straddling information. Because when it comes to straddling, you know, usually we want to go 50-50, you know, 50% calls, 50% puts. But again, if we're following the money, we can follow the percentages as well. But we never really want to go over 60%, because if you're wrong, then it's going to be harder to recuperate, you know, the balance. And so that's why you just want to have a certain limitation on that, or always just utilize it 50-50. but yeah, anything else you want to, you know, kind of go light. But let me show you something here. Let's go. So XPEV. Let me see here. Let's take a look at XPEV really quick. Yeah, Chinese stocks have been doing pretty. So, XPeng, you know, they're a Chinese stock that, you know, manufactures electric vehicles, but they're also trying to get into flying cars or flying vehicle, you know, type of, you know, craft, like a hovercraft or drone type vehicle. But with them being up almost 15% Friday, we can see that the calls activity, you know, like the $15 call strike price, was up 366% in one day. And so that is huge. And this option expires December 16th. Now I get this information from the NASDAQ website. Pull this because it can provide us the most active individual calls and puts for a particular stock option. And so, but this is what I'm talking about, where you can only lose what you have on one side, 99% or 100%, but your gains on the other side are potentially unlimited. And so, but this information can be highly, highly valuable. And another strategy that we can utilize, maybe as like a lottery play, because a straddle is definitely something that we do regularly and do heavy on, especially on these three, and because they hold their value, because the majority of the other investors are putting a lot of money into these, and when you have that, it maintains value, and meaning the least amount of time depreciation. A lot of you have experienced time depreciation, I'm sure, with many different stock options, and some have more time decay than others. But if we try to focus on where the money's going, where all the volume and open interest is, it's going to keep the value there, minimizing your time decay, and that is very, very important, especially if you plan on holding longer than you should. But another cool tip and trick that I wanted to provide you guys that I haven't provided before, because it is risky, but it does work a lot of the times. But definitely consider this strategy that I'm going to provide you as a lottery play regardless, because it is high risk, high reward. And so this information changes on a daily basis. Other than straddling heavily, 5, 10, 15 minutes before close, that way you can trade those during the next morning. Focus on other stocks that are not normally on here. So when you're normally looking at this regularly on a daily basis, you know what's normally on here and what is not normally on here. All of a sudden, we'll see almost on a daily basis, stocks that are on the list that are not normally on the list. But all of a sudden, you'll see maybe some high or unusual call percentage ratios. We have a 71% for NEO, and then for Peloton, we have an 86% call ratio. So, and then we have Tilray over here, which was up almost 10% Friday. They have an 88.5% call ratio. That's almost a 90% with these guys. This is telling us that the investors are almost certain that this stock is going to continue to go up the next trading morning. So that means that we need to buy in some calls on these ones. Again, this is a type of a lottery play. In case things don't work out, next day's economic reports, like I said, could provide a lot of bearish characteristics. But these guys may fly under the radar. They may not even be phased by other bearish news and activity. These percentages are very high. Normally, we see a 50-50, 60 or 40-60. That's normal. But if we start getting in that 70%, 30%, 20%, 80%, there's something going on there. Plus, these stocks are not normally on here. I mean, we do see these on here every great once in a while, but they're not on here on a daily basis. And so, this could be huge, because with these lottery plays, you can easily double or triple or quadruple what you put into it. And so just know that is a very, very good, high risk, high reward strategy that I want you guys to try out and see how it works out. But like I said, try it out, but go light, but always focus on straddling the top three. Let's dig into the most active individual calls and puts, and that's going to be under the option volume leaders. So when we're looking at this on a weekend, we want to exclude anything that's expired. And so, but sometimes looking at the DTE will help. And the DTE is the days until the option expires. So when we're looking at it, we see 0. That means it's expired. It's no longer valid. So we want to ignore it. So that means the next active individual call and put is the Tesla $200 call strike price that expires this Friday on December 9th. We can see that the open interest is only 16,000. It has a lot more interest at 82,000 in volume. And so if you're new to options or not aware of what open interest is basically the total number of open option contracts that have been traded but not yet liquidated via offsetting trades. That means that these are investors that had prior from today or that current trading day bought this individual stock option but have not sold it yet. So that means that this amount of people are holding. But then all of a sudden we see a massive number that exceeds that. This means that it is pure buying activity. Because if it was the other way around, like let's say this RLX is a 50,000 open interest and a 50,000 volume, that could be selling activity. We don't quite know because it's the same number. It could accumulate a little bit more, or all of a sudden tomorrow when the market opens, this could be significantly lower. And so because they could have liquidated their their options on it. And so, but when we see it where it's the opposite like this, that means that there are a lot of people betting that Tesla is going to continue to go up the next trading day. So we'll see about that. But this was definitely before Elon Musk had announced the Twitter files. And so that could change a lot of things. And so to be determined. So the next one is the AMD. We have a $70 AMD strike price that expires in approximately 45 days, which would be January 20th. We have 97,000 in open interest and now only 71,000 in volume. So this could be selling activity. They could be dumping it because maybe there's some clues that AMD could start to go up. It's the only one that I see on here on this page. So to be determined. Next one would be RLX. But the other thing too is that we can sometimes look at a bigger gap too. You don't always have to buy these as a call or put. You can also look at it to buy as a share. For example, Peloton, PTON, which is currently at $13.30. We have a $25 strike price that expires a year from now. So we have January 19th, 2024, or approximately 412 days from now. The open interest is 68,000, but the Friday's volume was 32,000. I mean, it most likely could be an accumulation. Maybe they're buying, or maybe they're getting rid of it. Most likely because the strike price is almost twice as much, and we have a lot of time on our hands with this one. Most likely this is probably buying activity and they're accumulating. So even if you bought Peloton at this price and it does get to $25 a year from now, you just doubled your investment as shares. So not only are you holding on to something that's appreciating, I don't know if they pay dividends or not, but if we're looking for, if we do find a stock that's like this, that pays dividends, not only are you holding on to something that's appreciating, but they're going to pay you dividends every 3 months. And so another good way to try to find these type of long-term option strategies or opportunities is to, rather than focusing on the list sorted out by volume by default, let's sort it out by open interest. So we can do that by clicking on it, and it'll just sort the page out by open interest, but we want to click the refresh button on the browser, and that'll refresh the entire system by open interest. And so you'll notice the whole thing is completely different. We have different stocks on here, and the times. We have a lot of these 48 days that are a lot of these stock options that are going to expire next month, January 20th. So we have Nokia, we have Ford, Bank of America right here, Ford, GSAT. Let's see, any other, not seeing any like huge significant, there's Apple, $160 call strike price on Apple. Not seeing any major, big gaps in between. There's a $100 put on Apple. Most likely these guys are dumping it. I'm not seeing any. But that's why we want to look at this regularly, because this can easily change. And so open interest can easily accumulate very quickly, but it can also be dumped very quickly. But that's why it's very, very important that we look at this stuff regularly on a daily basis. The other important thing that when we do our due diligence during the weekend, that we plan ahead, every Sunday morning the investing.com website posts a little article about the top 5 things to look ahead. So that's something that we'll take a look at here in just a little bit. But I did post information on the earnings for this week, and so earnings there's definitely going to be some major volatility with some of these guys, and but some of the ones we're going to see, like tomorrow morning we have the Veru. It's like a new healthcare company. It's the first one that we've kind of analyzed. But yeah, I mean, GameStop, I mean, there's going to be a lot of people focusing on GameStop on Wednesday after the stock market closes. And so, but yeah, let's kind of dive into some of these. There's a lot of great opportunities here. Oh, Li Auto, my goodness, Friday is really the only one on there. So Li Auto, another Chinese electric vehicle stock. So that's definitely going to provide some good volatility on stocks. So what we want to do on Thursdays is probably straddle like NIO, N-I-O, because if we do the stock options on earnings can be very, very risky, even if you're straddling, because of something called IV crush. It means implied volatility crush. If the stock doesn't move really much at all, it'll depreciate and devalue both the calls and the puts. So that's why this is also considered as a lottery play, where we want to go light, not heavy, and because it's a high risk, high reward situation, and but we want to be more certain than ever before, knowing that what's going to happen before it happens. And so Costco is going to be this week's most anticipated for Wall Street and many investors, but I think a majority of people are really going to be focusing on GameStop the most. But Costco is scheduled to release their earnings on Thursday after the stock market closes. The company's earning release has a 76% expecting an earnings beat, as a lot of consumers are trying to buy in bulk, trying to save on their expenses. Option traders are pricing in anywhere between a 4 and a 5% price movement, where normally Costco moves around 3%. Now, AutoZone is scheduled to release their earnings on, let's say, Tuesday morning before the stock market opens. That is going to be on December 6th. The company's earning release has a 63% expecting an earnings beat. Option traders are pricing in around a 5% price movement on AutoZone, where normally it moves around maybe 3 to 4%. And so, but Veru Healthcare, like I said, this is the first time we've kind of analyzed it here. They're expecting to release their earnings tomorrow morning on Monday, December 5th. Before the stock market opens, they have a 49% expecting an earnings beat. So it's nearly 50-50. However, option traders are pricing in around a 30% price movement, which I wish we would have known this last week. But normally it moves around 10%. So it is a very, very volatile one. However, this can still provide us a good opportunity if it does happen to do that early in the morning. Most likely it could easily gap down. So if it does open up that high in the morning, it may provide a good opportunity to day trade puts. That way we can maybe bet against it, ride it down halfway, and then that way we can get in and get out, secure our gains. And so, but we definitely want to keep an eye on this one tomorrow morning to see what it does, as well as its activity, volume, and whatnot. So. Next one is a little Lulu here. They are confirmed the release of their earnings on Thursday after the stock market closes. The company's earning release has a 79% expecting an earnings beat, as their sales have anticipated have gone up. Option traders are pricing in around a 7.5% price movement, with Lulu, where normally they've recently been moving around 5%. So. DocuSign has been a very, very volatile stock, and so ever since the pandemic, they've been used to basically do a lot of e-signatures. That way you can do it online rather than doing it physically. That way you're less exposed to things and whatnot. But they've kind of slowly declined they were a pandemic stock. The pandemic's over, and so a lot of those pandemic stocks have kind of gone back to where they were before the pandemic. And so, but this guy, I mean, if you look at the charts in the last couple of years, it has been crazy for this stock. But DocuSign is confirmed to release their earnings on Thursday after the stock market closes. The company's earnings release has a 41% expecting an earnings beat. Now, normally these things average right around 65% expecting an earnings beat. If it's less than 65%, we definitely consider that below average. If it's above 65%, then we definitely can consider that above average. This is definitely way below average, while option traders are pricing in around a 16.9% price movement, when normally we've seen it move around 20%, even as much as 30%. I mean, this thing moves. But when it comes to straddling it, because we're not sure if it's going to move 16-17% up or down, but as long as it picks that direction, this will be a great one to straddle both calls and puts as a lottery play. Do not go heavy on it, but this is definitely one that could really be in our favor. And it usually has a lot of volume and open interest. GameStop is expected to release their earnings on Wednesday after the stock market closes on December 7th. The company's earnings release has a 50% expecting an earnings beat. Option traders are pricing in some good volatility with this one, right around 12%, where normally it usually moves around 10%. But we're entering the holiday season and stuff, so they may kind of throw some of that in there, in consumer spending and blah blah blah. So we'll see what happens, but it's going to provide some volatility. It's going to reach the news. It's going to reach the top activity list and everything. So be prepared. This one is another new one that we just analyzed. First one we've analyzed is the MongoDB. There are some web applications company. So MongoDB is expected to release their earnings Tuesday after the stock market closes. The company's earnings release has a 56% expecting an earnings beat. However, option traders are pricing in around 17.5% price movement on this thing. So we'll definitely have to look at some options activity on this to see if they're worthy enough due to good amount of volume and open interest. Because if we're doing our due diligence on these and they have really no volume or open interest, we want to avoid it, because that is part of our rules and our guidelines is to always trade or always follow the money, always trade based on activity. It's got to have a certain level of volume and open interest, otherwise it becomes invalid. Next one is the Science Applications International Corporation. They are scheduled to release their earnings report tomorrow morning before the stock market opens. The company's earnings release has a 39% expected earnings beat, which is terrible. Option traders are pricing in right around 6% price movement in either direction, where normally it moves around 3%. So it's going to be, with these major economic reports, not economic reports, but with the economic report tomorrow morning and these three major earnings reports and the weekend news, tomorrow morning is going to be a lot of fun. Next one is this DLH Holdings. This is another new one that we've never really analyzed since the beginning of our group 4 or 5 years ago. And so, but the DLH holding, which you can see, because sometimes a picture can say 1,000 words, that they're a tech company. Maybe they're new IPO recently. And so, but it's definitely something that we need to kind of do a little research on, because as they're more active on the stock market, they're going to get more noticed. So we need to notice them first. So they're scheduled to release their earnings tomorrow morning as well, before the stock market opens. The company's earnings release has a 42% expecting an earnings beat, though there's just not enough information. They haven't been around long enough to determine, what they've done recently in the past or what we anticipate that they may move. But we do anticipate that it could be easily something that could reach the news, and that's why it's on here. Broadcom Limited, they are microchips and everything. That's a very sensitive subject because of the short supply, high demand, and and the shortage in rare earth materials. But as things have gotten better in the last year, these companies were struggling. They just weren't able to get enough of these rare earth materials to manufacture these electronics. But things have gotten better every quarter, and now we can see a very good percentage on Broadcom that is scheduled to release their earnings on Thursday after the stock market opens. The company's earning release has a 79% expecting an earnings beat. That is huge. That is good for them. Option traders are pricing in around 4% price movement with Broadcom, where normally they move around 3%. So, but again, we want to always visit the top 5 important things to watch on article on the investing.com's website. As we've done our due diligence, we want to make sure that we didn't miss anything. As investing.com says, it's set to be a quiet week on the economic data front, and Federal Reserve policymakers are in their traditional blackout period ahead of their final policy meeting for 2022. Investors will be looking to Friday's United States producer price inflation data for clues about how hawkish the central bank may be after 4 consecutive jumbo rate hikes to fight decades-high inflation. The OPEC Plus ministers are due to decide on output targets, while the Reserve Bank of Australia and the Bank of Canada are to deliver what will be closely watched interest rate hike or interest rate decisions. Here's what we need to know to start our week. So the first one is the United States data, which we had kind of talked about. The United States is to release November's PPI data on Friday, with the headline figure expected to rise 7.2% on a year-over-year basis, slowing slightly after the 8% increase the previous month. The core PPI, which strips out the food and energy costs, is also expected to cool. The Fed Chairman Jerome Powell said last week that it could be time to slow rate hikes. Key word, could. He has said this before, you guys, and then all of a sudden, then the next time they talk, which is obviously that's what they're getting at, he could also say that after analyzing these reports and information, that they need to continue to be aggressive on the interest rate hikes. So that's why we're seeing these big swings overall with the market. Rising hopes that the central bank was closer to the end of its tightening cycle, but Friday's jobs report showing that that hiring remained strong last month, while average hourly earnings increase muddied the outlook. The United States is to release the CPI data next week ahead of the Fed's final meeting of the year on the December 13th and 14th. Besides the PPI figures, the economic calendar for this week also includes the ISM services, the PMI on Monday, along with the University of Michigan's Consumer Sentiment Index and the Thursday's weekly report of the initial jobless claims. So the OPEC meeting is number 2, and so representatives from the OPEC, which compromises the Organization of the Petroleum Exporting Countries and allies, including the Russia, were meeting on Sunday to discuss output targets after the group of 7 nations agreed a price cap on Russian oil. On Friday, the G7 nations and Australia agreed a $60 per barrel price cap on Russian seaborne crude oil in a move to deprive President Vladimir Putin of revenue while keeping Russian oil flowing to global markets. Moscow said it would not sell its oil under the cap and was analyzing how to respond. The OPEC angered the United States and other Western nations in October, when it agreed to cut output by 2 million barrels per day from November until the end of 2023. Washington accused the group and one of its leaders, Saudi Arabia, of siding with Russia despite Moscow's war on Ukraine. OPEC argued it had cut output because of a weaker economic outlook. Oil prices have declined since October due to China's COVID lockdowns, slower global growth, and higher interest rates. And then number 3, stocks. As we talked a lot about a lot of options activity and earnings. And then number 4 is going to be the central bank decisions, and then the Eurozone. So, so it looks like we've covered a lot of the the scheduled activity that is scheduled to happen. And so, other than that, I think that's the majority that's scheduled to happen for this week. Anybody have any questions? Anything anybody wanted to go over, bring to the table? Feel free to unmute your mic if you would like. Yeah, if you guys
do you ever do straddles? Do you do like stop losses on those ever?
So the straddles, it's good to do what's called a trailing stop loss. Instead of maybe, there's a couple different ways you can do, certain things where you can, if you have profit, rather than just selling it and securing it, you can do what's called a trailing stop loss, where if it does go down to a certain level, that it'll automatically sell it for you. But it's important that when it comes to straddling, that we can sell at different times. We'll buy, maybe 5, 10, 15 minutes before the stock market closes, and then sell it the next morning at different times. That way we can maximize our gains on one side and try to minimize our losses on the other side. And so one of the reasons why we want to buy 5 to 15 minutes before close is because usually at that time there's not a whole lot of movement, because where it's at, it's pretty much where it's going to be at for that remaining time. Plus we're avoiding time depreciation throughout the middle of the day, because the most volatile times of the day is going to be the first hour and the last hour. And so if we get in, and sometimes we can get in before certain things. So let's say utilizing the moving averages, the crossovers are our buying and selling signals. So we can see that it crossed over. But we want to usually do that within, like I said, that hour. But it looks like Apple started to kind of trend up, a couple hours before close. But monitoring that, it could be a little risky, because if it's flat, you could suffer more time depreciation. So that's why it's just important for the majority of the time, buy within that 5, 10, 15 minutes before close, preparing yourself for the next day. That way you can trade them. And it may feel like day trading, but it's considered a swing trade. You have unlimited swing trades no matter how much is in your account. If it's less than 25,000, you're limited to 3 day trades per week. You have unlimited swing trades, but this is a great opportunity to buy right before close to sell them the next morning. And if we're aware of what's going to happen, like for example, we talked about the president's schedule and the White House schedule. We knew that the president was going to talk about the railroad, preventing that from getting messed up. And I think he's probably just messing it up even more. But it still worked. You know, it was a little bit of a delay. I mean, it took a little longer for the news to kind of start pumping that news out. You know, but that should be considered bullish characteristics that we can kind of anticipate towards the end of the day. And so when the market was down, we could sell our puts, and we can also hold the calls until, you know, that time, and we can sell it too, as long as you're aware of what's scheduled to happen and know whether it's going to provide bearish or bullish characteristics. But sometimes selling at different times can be too difficult for people, because maybe they don't use moving averages, or maybe, you know, they're just, you know, maybe they don't have the right settings or something. You can sell at the same time, you know, if it, and you know, a lot of times, like if the stock doesn't move that much, it's going to be a wash, or very low. You may lose maybe a couple percentages due to time depreciation, but that's why it's important to probably to sell within the first hour of from the market open, because after the first hour, the majority of people are going to sell anyways, and so we're going to start to get time depreciation or time decay that's going to devalue both the calls and the puts. So usually the middle of the day is what I call day trading territory, and so it's usually it's mellow. There's not a whole lot of activity that's happening, because like I said, most of the activity is the first hour and the last hour of the day. And so but once you're out completely, you can always get back into day trade as long as you have day trading capabilities. But even if you're at a wash and if the market doesn't move, that's fine, because it's better than a loss, and it allows you to continue this strategy day after day. Because what we're looking for is to try to straddle into a day that's scheduled to have a lot of volatility, just like you know, what's scheduled to happen, you know, here. And a lot of times we can focus maybe on the you know, the pre-market stuff, or if it's earnings, a lot of times other earnings can affect similar stocks, you know, especially those Chinese stocks that we've seen a lot of activity on.
So do you recommend selling your losers first and then hanging on to your winners?
No, focus on the gainer first, because we always want to maximize our gains on one side but minimize our losses on the other side. Once we're done with our gains, now we want to minimize the loss, and sometimes we can turn that loss into a gain, because if sometimes the market or the stock may open in the red, but then somehow it surges up in the green, and if the market is down, you're gaining on your puts. We're waiting for the right time or signal to sell, and we just secured our gains on that, and now we're holding on to the other one that's at a loss. And so and hopefully it's going in the right direction that you need it to minimize the loss, or to even turn that loss into a gain, so you can potentially gain on both sides. But if it doesn't do anything within that hour, then it's just best to get out and to continue to do it, you know, the next trading day. Unless you're aware of certain times, like maybe there's an economic report that's scheduled to be released 1 hour after the stock market opens. Wait for that, because it may provide the bearish characteristics or bullish characteristics, just like what we were talking about with Wednesday. Wednesday has their crude oil inventories is supposed to bounce up significantly, which should provide bearish characteristics. I don't think it's going to be in the negatives. It should be in the positives, but like I said, that should provide a lot of bearish characteristics. So if the market opened in the green on Wednesday, we can sell our calls, because most likely the stock market is just going to drop, and it's going to slowly drop for that 1 hour, and then all of a sudden this comes out, and then boom, then you see this huge plunge, and now our puts that were at a loss are now in a gain. And that's the only reason why we'd want to hold our calls or puts past that first hour, because this is an exception for that. But in other days, there's no exception. Do not hold past that 1 hour, unless we're in the day trading territory. Then we day trade within the middle of the day. So hopefully that makes sense. There's just a lot of these clues and pieces of the puzzle that we have to put together. And once they're together, it makes a lot more sense. We have a better idea of how the week's going to play out. So hopefully that makes sense. Anybody else have any questions or want to bring anything to the table? Anything you guys want to talk about before we end our meeting?
So when you're talking about those January 2023 calls, a lot of those are probably leap calls, no? From like last year or the year before?
Yeah, well, for the open interest, yes, definitely. And what we'll see that as well, let me get back in there. Once those expire or get close to its expiration, we're going to see all new ones. Yeah, because that's a lot, 48 days. And we've seen these, we've been watching these all year long. And they've always been like 300 something, and 200, and then 100, and so they're getting close to that. But I would anticipate we'll probably see all these gone before Triple Witching Day here. Not this, but next week on Friday is what I am anticipating, and that is when we should see all new, a whole new list sorted out in open interest. But we can also go to, if we just click on options, it should take us kind of like a little bit of a summary of different areas, unusual options activity, and then we have the most active options, covered calls, but I think there are leaps here somewhere. I can't remember where I saw that, but yeah, so yeah, next week when there's after Triple Witching, we're going to take another look at this that week and see where the money's going. Yeah, because it'll help provide us a good idea of what long-term, or not short-term, long-term investors are anticipating. Because a lot of these guys, I mean, they have inside information, and so that's why we like Follow the Money. This is like our radar. This is where we can kind of see what's going on with different stocks at different price levels, and when and where, and this and that. And so this is highly valuable information. And when we get all new activity, once all these reports and information comes out, we can see where things are headed. But so I can't wait. It's gonna be very exciting. So like I said, we've seen all these pretty much all year long, so it'd be kind of nice to see kind of what, if there's going to be any changes, anything new. We could start seeing Apple 200 call strike prices from a year from now. Ford, we could see Ford at $30 from a year from now. Yeah, it's gonna be interesting. All right, guys. Well, I think that's it for now. We'll do this again next weekend. I'll be available in the chat room for now. I'll upload this video if you want it for your reference. Any questions? You can hit me up there. Thank you guys for coming. Have a great week. Make lots of money, lots of gains, and just make sure you make good choices. Though, always let us know. If you see anything. That way we're aware. And but yeah, so good luck, you guys.